I know this is a very uncommon opinion. It's very bold, but I do believe that the cryptocurrency market, as well as all stocks, all risk on assets, are going to crash very soon. And I have some very compelling and detailed research that I want to present to you guys today. And not only am I showing you research, I'm putting my money where my mouth is. And I'm currently 93% out of the market holding cash. 7% of my money is in the crypto market, and I will likely sell it on the next pump. So, right now, just to be clear with you guys, I think the market's going to fall, and I think it's very obvious. And so, I'm going to go through all the details in this video, regardless of how unpopular it is or how pissed off people get. I don't care. My goal is accuracy. This video is for people that want real research and consider every angle and are actually trying to make money, not those looking to confirm their own bias. I look at every perspective. I look at the bullish side and the bearish side. Okay, if you're too emotionally attached to your investments, I highly suggest you do not watch this video. It's going to make you feel some type of way, and you might point the finger and try to blame me for your investments. That is not my goal. My goal here is to simply provide you research. And if you can't take that, it's okay. Take a step back, do something else. All right. My goal is not to hinder your life, but to benefit your life with research. This video is for people that can detach themselves from their investment, look at it from an unbiased perspective. So if you have an opposing viewpoint, leave a comment below. And if it goes against what I believe, and if I'm wrong, I have no problem switching. The goal here is to make money, and the goal here is for accuracy, not for emotional investing. So my core belief right now is that the Federal Reserve is going to reset the entire economy. Think about it for a second. Everybody take a second. Just really think about this from an unbiased perspective. We have a president, which is a business president known for making money. I mean, that's pretty much one of the biggest reasons why Trump got elected is he can make us money, right? He can make this country prosperous. That's for the whole entire economy. But for cryptocurrency specifically, we have a pro-crypto president with the most significant news in all of cryptocurrency history. We're talking about a Bitcoin ETF, a Ethereum ETF, a Bitcoin stockpile, bro. Like, that is not normal, right? We have regulatory clarity happening in crypto. These are the things that we've always wanted in crypto. I've been in it for 8 years and I've never experienced this type of bullish sentiment around cryptocurrency. But for some reason, even though we went through all of that, the market is not going up. Since Trump got elected, the market has been free falling. So you have to ask yourself a question like, why is it extremely bullish news, but the price is not reflecting it? What is going on? Ask yourself, seriously, like, why? It looks really good in social media and in the public, but asset prices keep falling. This is a sell the news event that we are currently experiencing right now, and we need a reset. Trump has done everything in his power to push the economy up, the stock market and all risk on assets, but it has not happened. He put as much hype into it as he possibly can. Now we need the liquidity. If you know anything about macroeconomics, you know that the Federal Reserve is a private company. They control this mechanism. They control the liquidity of the entire financial system. And usually before we see a big bull market, we need to see a major correction and interest rates need to drop. And we know this because even Trump himself tried to tell the Federal Reserve in recent history and recent news, hey, we need interest rates to drop. So this is my core belief. They want interest rates to drop. But the thing is, if you look throughout history, we need something very specific for interest rates to drop. And I want to show you that right now. Before we get into the actual charts, I want to give all of the credibility, everything I've ever learned, I have to give the credibility to God. And the reason I say this is because, again, He will quicken me. So just to be clear with you guys, I literally will get like a voice, and I believe it's God. And I want to be very clear about this because I know a lot of people don't understand this concept. But I'll get like a voice. I'll get like, a feeling in prayer or when I'm reading the Bible or when I'm worshiping God, and he will tell me these things. Today is Sunday. I didn't want to come to the office on a Sunday. I don't work Sundays, right? But I'm here for the next 3 hours to get this content out to you. And so I do believe everything I do, every piece of credibility, every way I act, all the research is not me. I have to give credit to God. It is literally like that. I know a lot of people, you've probably seen them in the UFC, and they're like, this is all God. And you never really understood what that meant. What this means is very simple. There's a man. His name is Jesus. He stands next to me in the spirit, and he'll literally stop me from what I'm doing, literally, and say, hey, Alex, go make a video. It's literal. It is not a wishy-washy thing. I'm talking about I have a conversation with, I'm like, hey, what do you want me to do today? He said, Alex, I want you to go make a video. I want to be very clear how this works. I have a relationship with him. He is my friend. He is my father. And he tells me what to do. So all credit and all glory goes to God, not because I'm just giving it to him. No, because he is the one that started all this. He actually made it happen. And I know some people might not understand that, and that's okay. And there's nothing wrong with that. But I want you to understand my perspective. It is literally God guiding me in my research in a literal way, not a wishy-washy way. I believe God did a little miracle. He does miracles all the time in my life. But I'm talking about today, this man stopped me. And this is the background. He stopped me and said, Alex, go make this video. That's what happened. And so all glory goes to him in a literal way, not a figment of my imagination, but I have conversations with him, and I just want you guys to know that. So this is the chart that we're going to look at for the majority of the video, and I'm going to explain it very simply, but you could take notes as well, and you could use ChatGPT to help you with the explanations. The first thing is the S&P 500. So this top chart here, as you can see, is the S&P 500. It's the Standard & Poor 500, which is the top 500 stock technology companies. So this is the thing that's as close to possible as crypto. It's very similar. They're both considered risk-on assets. A risk-on asset is an asset that people typically buy when there's high risk. When there's a lot of risk appetite, everybody wants to take on risk, they buy stocks. It just so happens to be that cryptocurrency is the same thing. This is Bitcoin, right? It's a risk-on asset. But the reason why I'm not using Bitcoin to analyze the market right now is because Bitcoin only goes up into 2010. Bitcoin wasn't out in the 2000s. And we want to use that data for our research. I want to look into the 2000s. That's when the internet was created. Like literally, I think like 1994 or 1995 or something like that. The internet was created, right? And so we have an environment where we can look at risk on assets and we can look at a larger data set. So I'm focusing on the modern age, right, with the internet and everything and all of the perception and all of the media that came out on the internet. I'm going to keep it within this realm, but this gives us a larger chart. And by the way, it just so happens to be when it comes to the stock market and Bitcoin, they're very similar. They're like 98% correlated, meaning when the stock market drops, Bitcoin does as well. They're very correlated. They're almost identical. So that's kind of the reason, and that's what the top chart is. Now, the bottom chart is the federal funds rate. This is the rate, okay, at which they allow banks to get loans of money, okay? So basically how it works is they don't print money. So when a lot of people are like, they're turning on the money printer, I'm pretty sure you heard of that. It leads to inflation. They're printing money. They're not like in a warehouse somewhere actually printing money. What's happening is they lower the cost of borrowing money. So for example, if I have two people and one guy wants to give you a loan for $1,000, the other guy wants to give you a loan for $1,000. This guy gives you that loan, but he's like, I want 5% back. This guy gives you a loan and he's like, you don't have to give me anything back, just give me the original $1,000. Which loan are you going to take? You're going to take the one with $1,000. Not only that, but you might even take extra loan because he's not asking for any money back, right? He's literally 0% interest, right? It's very low interest. So this environment actually creates that risk on appetite that we've seen. We need very low interest rates. And this is for all the banks, all the big institutions, all the big companies. They want 0% interest. Why? Because they could just buy stocks. The stocks will make them money, or crypto or whatever. It will make them money, and they don't have to pay back the 0% interest. They don't have to pay anything back, right? And so this is the type of environment that starts bull markets. This environment starts bull markets. We need low interest rates. Listen to what I'm saying. And so the comparison here is going to show you the proof in the actual chart to where this starts bull markets. And it's beautiful because we're looking at the modern age too, with the internet and everything, like with modern finance and modern communication. And you can see a very clear pattern happening right before your eyes. Let's take a deep look at the first crash, which is right here in the 2000s. This is what you consider the dot-com bubble. The dot-com bubble was when the internet first came out and everybody had an internet company, and these companies didn't really have value, but everybody was making an internet company, and all the big investors were buying internet companies and investing in them. And this was the first major crash in the modern age. And if we come over here, you could see that the market went down 50%, that's catastrophic in the stock market. And as you can see, it took 791 days to reach the bottom. So the question is, first off, what caused the crash? What caused the crash is very simple. It's over-exuberance, excitement, like just unparalleled excitement. These people are just emotionally investing. They weren't actually looking into, the actual companies. So what I'm saying is the lowered interest rates, which is the pink line, is not the cause of the crash. The cause of the crash is usually a bubble or a major economic event. Let me say it again, a bubble or a major economic event. That's not the cause. But the solution to bring the economy back up is the Federal Reserve. That's the solution. So as you can see right here, we have the top of the stock market, and that was 77 days. And then they started switching. Look at right here. Look at the right side. We have interest rates at 6.44%, meaning the cost of borrowing money was 6.44%. But as you can see, they started dropping interest rates. They kept dropping and dropping and dropping, and we came all the way down to 1.25, as you can see on the right-hand side there, 1.25% interest. And that marked the bottom. It was very low interest rates. And so what happened is all these investors are like, wow, this capital is really cheap to borrow. We're going to borrow a whole bunch of capital and put it in the stock market because the stock market is down. Think about it. The stock market is down 50%, and I could get 1% like on my loans. I'm going to take out loans and I'm going to start buying stocks, right? The biggest investors in the world, they don't buy risk on assets when it's expensive. Why would they buy up here? They buy down here when they have two different things benefiting them. Very cheap capital to borrow, right? And they have very cheap stocks and risk on assets. Everything's cheap. Why not make the play? They can't lose. Even if it went down more, all they have to do is wait a couple years and it's going to go up. It's not even their money in the first place, right? And so again, the reason why the Federal Reserve drops interest rates down to 1 or 0% or whatever the case is because they don't want the market to keep crashing. You guys should read the book, if you haven't already, The Creature from Jekyll Island. It exposes the Federal Reserve. But long story short, we are pretty much living in a house of cards. The modern economy it's pretty fake. It's as equivalent to someone just taking money out of your pocket, right? And so they control the monetary supply. And when they see massive crashes, a whole bunch of people become very unhappy and displeased, right? They start pointing the fingers, start getting upset. We see riots. We see people going hungry. We see recessions. We see a lot of negativity. So they're like, okay, well, let's print money, inject it into the system, stimulate the economy through dropping interest rates, and then people will start taking on more risk, which will bring up the entire economy. And that's what it did. So as you can see right here, the entire market went up 101%, which in terms of the stock market, that is significant. That is crazy. Remember, this is not individual stocks. Individual stocks are going up way more. This is a basket of the top stocks, right? Which led us to our next crash, which was the 2008 housing market crash. As you can see right here, this was the top. We went down 58%. It got worse. That was the next crash. Now, again, I want to be clear with you guys. The Federal Reserve dropping interest rates is not the cause of the crash. It's the solution for the crash. We see a big crash, everybody gets upset, everybody starts losing money. The Federal Reserve comes in, they start dropping interest rates, and in this case, they dropped it down to close to zero. Just think about it. Think about it from a bank's perspective. I can loan out money and the government will only charge me 0.17% interest. It's close to 0%. 0% interest rates. That is ridiculous. Of course, they're going to do it. And at the same exact time, we see the market down 60%. Why wouldn't they take loans out to buy risk-on assets and make money, right? Look at this. Look at this epic bull run. Think about all of the big players, the Warren Buffetts, the big dogs that just took out massive loans and started buying this massive crash. Look at how much they benefited. That's what they're doing. People always want to know how to make money in the market. All you have to do is wait for a crash and buy low. And it's pretty much guaranteed. Look, 327%. That was 3 times more profitable than the dot-com bubble, right? And so if we look at when they started dropping interest rates, I want you to remember this, right? It's very important. As you can see, the top was 119 days after they started dropping interest rates. So in this case, the Federal Reserve kind of anticipated it. They're like, okay, something's going on. We're going to start dropping interest rates a little bit, right? Right here, they start dropping it. And 119 days later, we have the top of the market. So in this case, it was before. The top of the market was before. And you could even probably say that this was probably the top of the market. This was the top of the market. And the Federal Reserve reacted. They were reactionary, but they learned. And they were like, okay, well, dang, like we should probably drop interest rates before the top of the market next time. And they did. They dropped interest rates before. They saw what was happening. They were like, okay, people are getting overly excited with all of these, real estate developments and spending too much money in real estate is getting a little bit crazy. Let's drop interest rates ahead of time to try to get ahead of the curve so that we don't experience a massive fall. And that's what they did. They dropped interest rates ahead of the curve, and 119 days later, the market fell, right? And so let's look at the third one, which was COVID, right? Same thing. They're like, okay, so stuff is happening. It's getting a little bit too crazy. Let's drop interest rates. And you see this catastrophic fall. Now, I believe it would have went down further, but they printed, I forgot the exact statistic, but around this period of time, the amount of money they printed superseded any other period they ever had ever. They printed like 90% of all dollars in circulation in this one moment. So they went on like in an emergency massive, like they printed like no other. And so it kind of stopped the fall quickly. And look at the difference. Look how quick this one was, because this was COVID, right? So obviously it was like out of nowhere, black swan event. In this case, you see how long it took to get to the bottom? It was like, it wasn't a couple days. It was like 511 days. So the Federal Reserve had more time. They had more time, to lower interest rates and things like that. And this one was like, I forgot the exact amount of time, but this was long period of time as well. That was almost 1,000 days to reach the bottom. So it seems like the black swan event, COVID, was just extremely exacerbated. And so they took extreme measures to print as much money as possible to bring back the market, as you can see right there. So the trend is, again, the Federal Reserve dropping interest rates is not the cause of the crash. It is the solution, but they get ahead of the curve. They're smart. They get ahead of the curve. They understand this and they're like, okay, let's drop interest rates ahead of the curve. And that's what they did. So they drop interest rates right here. And then 232 days later, we see a crash. And then they aggressively drop interest rates down to 0%. As you can see right there, 0% interest rates. And then again, the same thing. The cost to borrow capital is 0%, right? So everybody starts taking out loans and they start buying into the stock market, and the same exact thing happens again. And we go up. Now, for the prediction, let's look at where we're at now. It's following a very similar trend. I talked about Trump. I was like, hey, like, why are we having this great bullish news and Trump's doing everything in his power to bring up the market, including tariffs and all these crazy things that are supposed to financially benefit, America and the entire stock market. And we have the business, the pro-business, president. He's going to make us all rich. But like, look at the S&P 500. That is a top. That looks like a top. That doesn't look good at all, right? And at the same time, look, the Federal Reserve is getting ahead of the curve. They already dropped interest rates over here, right? They dropped interest rates way over here. And a lot of you have been watching my videos for a while. You guys know that this was one of the major reasons why I sold, right? I believe I sold too early, but it doesn't mean it wasn't going to play out. I should have waited the 200 days. I should have, stuck to my strategy, which I believe this is sound research, but my execution of my research was off. I should have held, because instead of this happening, the trend is that it's going to take longer for the market to drop. Usually, as you can see here, 232 days, right? So I should have waited 200 days and sold. I'm still in profit. I made a whole bunch of money off of cryptocurrency. I'm up big. You can't ever go broke taking profit, obviously. I've made a lot of money off crypto this cycle, a lot of money. So I'm not upset about it, but the perfect answer, if I was a perfect human being, would have been to wait the 200 days. And so that's what's happening right now. And I believe they're dropping interest rates in anticipation of this. But remember, this is the kind of final thing that's going to blow people's minds. And these are some big, bold claims. Remember, very simply put, this was the dot-com bubble. The dropping of the interest rates is not the cause of the crash. We need something else. There has to be a bubble pop. This was a bubble. This was a bubble. This was a black swan event. So all 3 times we dropped interest rates below 1%, there was some type of catastrophic crash. 2 of the times was a financial market related crash, and 1 of the times was a black swan event. If you were to ask me, I think this time it's going to be a financial related crash. And I think it's very obvious. I think this time they're going to use cryptocurrency as their excuse to why the market fell. As you know, Trump is a pro-crypto president, and he's been talking about crypto like crazy. And all altcoins right now are down 70%. So there's a lot of crypto companies right now that are over leveraged and could file for bankruptcy, like FTX Exchange. If you're involved with FTX Exchange and you understand this, FTX Exchange went bankrupt right here, right at the bottom, which you would think, right? Like if FTX Exchange goes bankrupt at the bottom, you would think the market would continue to collapse. No, that was actually the bottom. And a whole bunch of people bought all the assets from FTX Exchange. Remember, the wealthy investors, they look for these crashes. They want the crashes to happen. Listen to what I'm saying. They want this to happen, right? So what's happening is they're using crypto as the scapegoat. It's kind of like a mark of a new asset class, like kind of like assuring everybody. Like think about it. This is like the stock market bubble, then the housing market crash, and the Federal Reserve like, these guys are like, I can't use the housing market anymore. People already know about it. And they're trying to use something completely different. I believe that we're going to have an exacerbated crash with crypto. We're going to see like people that are over leveraged, like Michael Saylor, that has way too much Bitcoin. Michael Saylor's literally been taking loans out on his own company to buy more Bitcoin. So he's like extremely over leveraged right now. He's down a lot. Some of these companies could file for bankruptcy, cause the market to crash, which will give the Federal Reserve an excuse to what? You called it. It will give the Federal Reserve an excuse to drop interest rates down to 0%, which will start a new cycle, like you see here, like you see here, and like you see here. It will start a completely new cycle, and then we'll experience the greatest altcoin cycle ever. I do not believe that the crypto cycle is over. If anything, this gives me more confidence. I get even more confidence. Man, my confidence depletes as we go up. That's how this works. The potential to make money as the market goes up starts to drop because it's more likely it's the top. But when we see the exact opposite effect, when the market goes down, the potential of you making money increases. So when I see this, I'm like, bro, I'm ready. I'm ready to make a whole bunch of money off of cryptocurrency, and I'm going to pivot myself for this. And this is why I am out of the market with the majority of my portfolio. I do not have crypto. I'm waiting for this crash, and then I'll start buying as much cryptocurrency as I possibly can. That is my official decision. Now, just to be clear with you guys, There's a couple of emotions that might arise when you hear this type of information. It is very clear what I explained to you. If anybody look at this from an unbiased perspective, they are going to be precautious. They are not going to start buying as much crypto and go all in. That is not the way to move right now. That is not smart at all, and you know this. What I gave you guys is undeniable. You can make excuses and be like, oh, this time it's different, and say all that stuff you want. That's fine. But I'm gonna let you know a couple of psychological effects that happen to crypto traders as well as any trader in the market. And maybe this might give you some clarity. Number one, loss aversion. People fear realizing a loss more than they value an equivalent gain, making them hesitate to sell even when they know prices would drop. So a lot of the reason why people won't get out of the market is because they don't want to realize a loss. They think that when they sell, for some reason, that's when they lost. That's not how it works. You lose when you give up. You don't lose when you sell or buy. You don't win when you sell or buy. You lose when you give up. That is the true loss. Number two, endowment effect. Investors overvalue assets they own simply because they own them, making it psychologically harder to part with them. So a lot of you are too attached to investments because you've done a lot of research, you're involved with the community, and if you sell, you're going to get crucified. These guys are going to hate you, they're going to call you out, and again, this is where you separate emotions and you look at it from a logical perspective and stop caring what people think. Number three, status quo bias. The preference for keeping things the same leads to inaction, even when logic says selling is the better move. This is a big one for a lot of people. They think that holding a cryptocurrency, that if they just hold, that they're just doing nothing. They're omitting themselves from the situation. That's not how this works. I actually have a complete training that I want to give you guys. If you go to the link in the pinned comment below, my last live Q&A, I'm telling you right now, it really exposes all of this in extreme detail, even more detail than this YouTube video, extreme detail. It explains it. But when you hold a crypto, you're essentially saying that you're long. You believe the market's going to go up. There's only 3 different phases. If you hold a crypto, you think the market's going to go up. If you sell to cash, you are unsure. You're just like omitting yourself from the situation. And then the third one is if you short the market, if you say the market's going to go down, then that means that you are bearish. That's the only 3 positions. So if you don't know and you're unsure, it's very wise as an investor to get out of the market. That's how you treat this logically with no bias. Number 4, regret aversion. The fear of regretting a sale if the market unexpectedly rebounds, causing hesitation, even when the overall trend is clearly downward. This is a huge one for people. They think that even if the market pumps a little bit and they sold, that they lost. That is not how this works. That is an emotional bias. It is irrelevant. Your decisions in cryptocurrency, regardless if they're right or wrong, should not determine your emotional state. So even if I sold right now, it's completely wrong. Even if in 2 months this video was completely inaccurate, that does not determine the way I make moves. I continue to go down my path. A righteous man falls 7 times and gets back up 8. The only thing you should do is make a decision of, in the moment, what you think the truth is, and that's it. And completely detach yourself from the end result. That is how you trade. And number 5, sunk cost fallacy. Investors irrationally hold on to assets because they've already invested time, money, and emotional energy into them, even when selling is the smarter choice. I think that one's pretty clear. You just invested so much time into it that you're emotionally attached to it. These are all wrong. Number 6, confirmation bias. They seek out and believe information that supports their desire to hold while ignoring or downplaying bearish signals. People only want to listen to influencers that confirm their bias. If it's against what they say, they basically crucify them. I know this because I'm that guy. They attack you. They start emotionally attacking you. They'll use everything to try to, because they're pissed off and they're angry about life. Number 7, overconfidence bias. Investors may believe they can perfectly time the bottom later and hesitate to act now, assuming they have more control than they actually do. This is a big one. People think they're perfect. It's pride. They think they can do things perfectly, just ignore it, and somehow they're special. Somehow their asset is special. Their crypto is special, right? Number 8, herd mentality, social proof. Seeing others to continue to hold makes them feel safer in their decision, even if logic suggests selling is better. Again, following the crowd. This is approval of man. You want the approval of other people when you make your decisions, and you're not basing it off of logic. Number 9, recency bias. They overweight recent gains or bullish trends and struggle to believe that the bearish trend will last long enough to justify selling. Again, they're looking at the little pump of the market. I've seen this recently with some of my members in my course. They look at, I'm talking about, I'm bearish, right? And I'm talking about the overall sentiment. And then I get texts like, literally like, oh, there's a little pump. Alex, oh my gosh, it's a little pump. And they're freaking out. I'm like, bro, just chill, bro. Like the overall trend is down. Just look at the research, and it's as simple as that. Number 10, cognitive dissonance. The internal discomfort of holding a bullish belief while knowing the market is bearish creates stress, leading them to rationalize holding instead of selling. Basically what that's saying is people get emotional because they're so attached and there's so much discomfort that they don't want to face the truth. They don't want to look in the mirror, okay? And so if you are in any of these categories, I want you to understand that you are emotionally investing. You're not looking at it from a logical perspective. You justifying your opinion without some type of legitimate data is an emotional psychological effect. It is not real. It's not real. You need legitimate, tangible proof. And then from that proof, you make a decision, and that's how it works. And again, I have a whole, by the way, 7-day free trial. Link in the comment below. You can literally sign up for my 7-day free trial, watch my recent live Q&A where I went over this, and then just cancel your subscription. That's fine. I don't care. I can care less, bro. I just want to help as many people as I possibly can. Click the link below, and it goes into this topic extremely detailed. And this is like kind of like I'm trying to help people. Like, here's like your help. And like anyone can get it. It's free, right? Anyone can get this help. Go ahead. By the way, in the school app, if you go to the settings, you can cancel. Just go to the settings, and you can literally cancel your 7-day. And then you'll get the 7 days, and then you can go. I don't care, bro. All right, so go to the link in the comment below. And so just to finish up this video, I want to be very clear. Even the scripture confirms this. Some people might be loving money too much, and that's why it hurts you so much. That's why you can't just simply take somebody else's opinion. Like there could be people that watch this video that disagree. They look at it, they're like, I disagree, Alex. My research says otherwise. And I believe we're going to go into a bull market, right? And not hate me and be cool with that. I'm like, good, like, hey, all for you, Alex. I disagree, and I hope you make money. And that's how it should be. But if you get emotional, again, the love of money is the root of all evil. While some covetedness. You're like lusting over the money. It even caused people to leave the faith in Christianity and even leave Jesus and pierce them through many sorrows. That is the confirmation. All of these psychological effects that science put together, the Bible explains it very clearly in the scripture, 1 Timothy 6:10, that it takes people through many sorrows. If you love money, if you're too attached to it, if you're too attached to your cryptocurrency portfolio, this is why you're experiencing all of this emotional turmoil. And now it's time to change. It's time to ask God, why do I feel this way? Why do I hate Alex so much? Well, there are a lot of people be attacking me after these videos. Why do I have to attack them? Like, why do I have to spam in the comment section below? Why am I so triggered by simply information on the internet and somebody's perspective? And it's probably because you love money. And I just attacked your love because you think that this crypto is somehow going to save you. You think that this money is going to go up. I'm going to make $1 million. I'm going to be able to do what I want to do. That is love. You're lusting over money. And so I hope you don't take it personal. This is simply me sharing information on the internet from what I've learned and what I believe. And I appreciate you guys for being a part of my community. Thank you so much for the people that can look at it from a level-headed perspective and either agree or disagree. And there's nothing wrong with that. Leave a comment below if you have another perspective to help me shift my mind so I understand what's going on. And that's pretty much it for this video, guys. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates, and like I always say, if you don't get with it, you will get left behind. And the wealth of the wicked is stored up for the righteous, and righteous means right standing with God. Thank you guys for watching this video. I'll catch you later. Peace out.